Good morning, it's Harvey Jackson. Just going to go through some of the news items I see here. Canola crush numbers, Carnival Carney complex, Triple C, I guess. Here's the crush numbers, and what I'm seeing here is the 232,000 metric tons of crush. So we're up ahead of pace last year, and some of that is just very likely the other line or the other lines coming on, and that would be the LDC plant in Yorkton and Regina. They're starting to take product. I don't know if they're actually crushing anything there just as of yet. But the other thing I want to highlight is just where is our crush numbers, and we're looking in the 180 to 190 dollars per metric ton, better than, or very similar to a week ago, a little bit worse than a month ago, but last year at this time the crush numbers were just $125. And again, that just how the math is done on that is using canola and using soymeal oil prices, and as we've been talking about, the soymeal oil prices have been holding up, and the soybean meal prices, and it's just a factor of the calculation. So it's not a true crush margin. It's just estimates from the U.S. and we've got some problems with the U.S. of course in our trade partnership. But yeah, it's just something to keep a note here. So this is just showing our past trade history. I didn't want to go through it. There's really nothing that I saw. But here's our trade history that we've had this past year. If you traded the same bushel, same quantity following the advice that we've got, we would actually have made $12.60 on canola, won 17 out of 19 times. Spring wheat, we didn't have the win rate, but we still made some money. But we were kind of sitting on our hands on the spring wheat for the fact that we didn't know where that trade was going to go, if Chicago was going to take over some of that trade. And in Kansas, we did a majority of our trades there, and we made $2.46 a bushel. Soybeans, $2.90, and we lost some money on corn. And if we were to trade the overall position, $17.85 total. Here is just talking about conflict of interest here. Just one of the guys I follow on X.
Himself. The PMO did release names from one of the meetings that happened on Saturday. Carney was with executives from BlackRock, the Qatari Investment Fund, and Mark Wiseman, one of the co-chairs of the Century Initiative. All the kinds of names Carney's trying to attract to invest in Canada. But the issue for Carney going forward could politically be his own ethics issues. He has over 100 companies that he can't be involved in discussion with because of his own personal investment and past ties. So if Carney does break that screen, expect the Conservatives will try and make major hay out of that, trying to paint the Prime Minister as just like Justin Trudeau, who had 2 high-profile ethics violations.
So ethics violations are definitely going to be something that's going to be talked about there for sure. So just borrowed this from Susan Stroud here too, maybe to talk about what's on the right here first, just what the payments are. And this was a program set up by Biden. 85% of the payments are already made on the left or on the right hand side, but just looking at the amount that they're getting paid just because of the cost versus the revenue side, and there's some money that's getting paid out there. The other side, or the left side, is balancing the books September to October revision. So there's just an expectation here that the stocks are going to come in at 1.33 million bushels, up slightly from 1.325. So I don't have the estimates, but it's just stocks numbers. But there is a reason to pay attention to them, because if it's coming in with any numbers that are big shift differences, we'll definitely note it tomorrow or after the trade, so on Wednesday. Under U.S. Or under Trump, U.S. cedes a share of Chinese beef market to Australia. So it's just talking about how much that when Trump put on a tariff on Australia, basically shifted the beef market, but it also has shifted the canola market and soybean as well. Like everything is shifting away from the U.S. and it seems like anything but the U.S. When it comes to trading with China. So China is finding markets from everybody else. Here's just how the beef exports have been from Australia versus U.S. up until the tariff went on, and then you got the gap. So you got Australia increasing and the U.S. basically going to zero on the meats. Here's just another thing that came up in the news yesterday or last week. The H-1B work permits, basically trying to attract people working in the U.S. and that actually affects a lot of farm workers as well. But they're just talking about the tech industry, and China has got a K visa. What they're trying to do is attract people, and they're paying up to almost $750,000 as trying to attract those top talent to China. Just something to take note here. So you can see that there's some active weather, but just small showers. Really nothing in the forecast. You can see there's a little bit that's coming off the west coast, but really nothing. And you can see that there's that storm that's coming in here as well. We can see it a little bit more active here. On the left, we have GFS versus the right is the European model. And they're all showing slightly differences amount of rain here, but you can see the European model, artificial intelligence, is actually putting a band of rain right on the U.S.-Canada border. The European model is below, and the GFS looks like it's just into Manitoba only. Just to have a quick look at the markets. Canola down to 612. Rapeseed is trading for 468. Soybean oil is down half a penny, down to 49.74. Palm oil just basically flat, and the wheats are just trading slightly up in the most part. So if we have a look at it in the chart, still respecting this channel on the way down. Moving averages are above, so it's still got this pressure going down. Right at the 600 and let's call it 608, and still looking at this 582 as our downside target. Price differential between the European rapeseed and Canadian canola is at 151, and this is what the prices were last year, so in the 200s. Soybean oil still respecting the 200-day moving average. So if it breaks through there, it's very likely in this range over here, down in the 47 and a half. That would give us a full leg down on the canola as well. Soybean futures, same idea. If there's harvest pressure and we're going to get the harvest progress report after the close, we'll see if there's good progress. It sure looks like there could be, and it could have been as well for this next week and last week as well. Crude palm oil futures still here. Some analysts are talking about the 5,000 ringgit, where it could go back to, especially with the European waiving or delaying the deforestation plan. Another chart here that I haven't shown for a while, it's New York Harbor Freight, which is basically your diesel. And you can see that springtime we had our lows. Now we're probably in 2/3 of the range kind of thing. Canadian dollar, like we've got a triple spot here now. If we break through, we're very likely heading for this, the 70-cent range. Let's have a quick look at wheat. Nothing different than what we've been talking about, basically trading sideways since August. And yet, when you look at the Kansas wheat, here's a longer-term chart, and still bouncing off the bottom all of September here. We've traded a bit of a range, but now we're closer to the bottom again. Same thing with Chicago. Milling wheat, same thing as well in France. And the corn futures, looks like we're still trying to chop away and try to get out of this sideways trend that it's created. Feeder cattle, they had a cold storage report that came out, and it's actually made this a little bit green, I think, on the feeder cattle and on the live cattle. The stocks are quite low, but what it did show is pork was even lower than expected, and still probably looking for some upside there. My gut tells me that pork is just getting a higher consumption because of the price of beef.